accumulation by the big money quietly start to translate into higher prices at a time when the public is still completely and totally asleep at the switch. Same thing we're seeing in platinum. That's kind of been quiet, but it's interesting because platinum and silver, which have both done very well, have now been reclassified as critical minerals by the government. And so it's almost like it's the Treasury preparing to stockpile again. We've talked a lot about platinum or silver and the shortage, but the Japanese guy who's the head of the TOCOM exchange has come out and said there's no platinum available in London or Switzerland, yet they're trading 3 million ounces of spot contracts deliverable per day. Well, that's also been classified as critical. So I would expect hoarding of both platinum and silver. I think what the U.S. is realizing that these are national priorities. We've talked about that. Someone got into his ear and said, this is what the BRICS are doing. We better do the same thing. And then you look at the way that some countries are reacting right now. As right at the same time U.S. declares silver as a national priority, you have Saudi Arabia buy a bunch in SLV. You see India's demand of silver is up 431% year over year in May, and record ETF inflows in June despite higher prices. So yeah, I mean, there's a lot of demand for physical metal that hasn't translated into the retail side of it yet. But the rest of the world, the big money, whether it be on the exchanges or the central banks or the sovereign wealth funds, are making it very clear that silver and gold are quite significant, and platinum, to their plans moving forward. When you see 8 Western banks, and I'll talk about Ed Steer's chart again that you showed several months ago, when you see 8 Western banks that maintain the largest concentrated position of any commodity ever traded on COMEX, it's not to hold down the price. Well, it is, but it's not price that's bothering them because silver is inelastic. You don't need a lot to make a very expensive item. Even if it's 500 ounces in a Tomahawk cruise missile that costs millions and millions of dollars, or a fifth of or a sixth or eighth of an ounce in an iPhone, the cost of the finished product is so much higher than the little incremental price of silver. It doesn't matter. More along the lines of they've tried to step on it because rising price would attract demand, and there's not enough availability of it. The price has been skewed by the trading on COMEX and the LBMA. Its real value skewed, and so I think the rising price would attract investors, speculators. They don't want that. It's more along the lines of being able to access stockpiles of silver rather than the cost of the silver. I know that sounds kind of strange, but if you're making it for all of these critical components, it's less about the price and more about the availability because it's used in such small amounts in whatever the finished product is. But you're right. It has been suppressed. It has been held down. It has been manipulated. And I think now there's a race to accumulate it because indeed it is strategic. It is critical. It is needed not just in electronics and electrical components, just about anything that conducts electricity. It is needed in military components. It is needed in medical devices. It is needed in so many places, solar panels, etc. And that plurality of demand, from monetary demand to military demand to industrial demand, makes it strategic, every bit as strategic as any of these other strategic metals. And I think that's the change, is that Trump understands that, his administration understands it. So uninformed and hypocritical, because these are the same people that are all in equities at all-time highs, at the highest valuation since the 1929 crash, held up by 7 stocks, where the rest of the stocks in total are barely up at all on the Russell 2000. It's just naive as far as I'm concerned. And it's the fact that people don't understand that, yes, gold is at all-time highs or damn well near it, but because of overt suppression to make the dollar and the bond market look better than it is, or they are, No one knows how high gold and silver should be, but this is exactly the sentiment you would want if you're already positioned, because this is why so few investors ever make money. They miss the important part of the equation. The fundamentals they don't understand, and they just look at price, which is the ultimate tool of misdirection. That's why they do it. The big money knows that they can mess with the price and everyone else just keeps on walking. The people who understand value, understand math, understand logic, they take their time to apply it to this thesis, to this idea, would walk away saying, yeah, that's exactly why the big money is accumulating it quietly. This is the don't do as I say, do as I do. I would say that those people who are making that assessment are making a very foolish and ill-informed, hasty appraisal of the situation. They don't have any idea either. I mean, the market continues to move higher, and, it's without any regard for risk, or a risk of prevention or aversion. So I think that the pensions are in very big trouble. I mean, where do they get their yield? They're forced into the equity market because they're not getting it in the bond market. They're forced into the equity markets at all-time highs, at all-time valuations. And I think this in and of itself is scary because, I believe that especially if we see a decrease in yield or rates, you got valuations at literally 1929 style extremes. You got all of the insiders, the veterans, Gartham and Buffett and Dalio. They're all talking of highlighting systemic risk. You have insiders selling, as we've talked about, the industrials, or the institutionals rather, Bezos and Zuckerberg unloading billions in stock. And I just think that this is a very, very dangerous time where the insiders are moving out, but the hedge fund or the pension funds don't have much choice but to speculate. They're not getting the return that they had thought they would with treasuries or had hoped for, so they have to, at that point, speculate into the equity markets, as some of the most informed money in the world is moving in the other direction. And buying gold, which doesn't pay a coupon, even though it's outperformed everything, they won't even look at it. They won't even think about it. So it's putting a lot of people and their future in trouble, in jeopardy. I look for the pensions and to have before it's all said and done, the pensions will be something that you hear a lot more about, just simply because they are forced to take chances in order to get the returns that people are counting on. So yeah, they're not involved in this at all. They're not involved in any commodities because they don't pay a yield. They don't pay a return. So that's off the table as far as I'm concerned.